The Nasdaq Composite also adding around 0.1%, bringing its gains for 2020 to 4.3%. Let's bring in the market then on the European front. Well, it seems like it's all green across the board as we head into that midday trading picture. So a much better stance so far as things begin to perhaps ease up when it comes to the pressure then across the globe. Of course, the Iran situation seems to have come to a pitted out loss as well there. And we are seeing things out in China and the United States. Well, they've seemed to have made good for now when it comes to phase one of that trade deal. Phase two perhaps only to come into play later on after the 2020 election out in the United States. Let's head on over to the local market. Also some positivity filtering through here, firmly above that 58,000 point mark as well for the JSE. Yesterday was perhaps the only blip in a week that has been quite positive for the all share, perhaps headed now towards that 59,000, and who knows, we may touch 60,000 before the end of the month. But let's not get carried away as those industrials also picked up today. Financials, however, are languishing somewhat. Onto the resource share board, well, some positivity here as well, right? So the resource shares above that 50,000 point mark, the gold shares still getting some sort of positivity with the platinum counters. Look at that, now going at 71.3 points, and that's quite significant, having gained over 200% in the last year. It just continues to rally, and I want to touch on that as we move on to the commodities picture then, because that tells you exactly where things fare. But for now, let's get into that currency picture. 1439, so just slightly better picture for the currency, 1877 for the pound, and a euro will set you back 16 rand. But as I made note of the commodities picture a little earlier, it does then tell you that this platinum price is quite significant. It is its highest mark in 3 years at 1,024, having last reached that mark early in 2017 then as well. What it also means though is that palladium, of course, has continued to climb. This year alone, the gains for the palladium price have already reached 23% and continue to climb. Of course, palladium is used as a catalytic converter and is only a byproduct of having to mine things like platinum. So it certainly goes to tell you then that demand has certainly played its part as the market continues to keep tight supply there too. All right, let's quickly check in then on the BRICS currencies. A very quick picture on that front, certainly into some zero marks on that front there. So not much in terms of movement. Let's head on over then to Warwick Lucas, who joins us, of course, as we unpack this market picture a little bit more. Warwick, thank you so much for the time. A happy Friday to you, and I believe it's the first time this year as well. So happy New Year.
And to you and the viewers.
Fantastic. Look, we've almost had World War III in the time that you've been away, and things have finally calmed down just a little bit more. But there's still a lot happening in this market.
Yeah, I mean, it certainly has been an active start to the year. I think very fortunately the Iranian situation looked like it diffused itself somewhat, which is a relief for sure. We didn't need that kind of excitement getting going. And so far no hiccups on the signing of a very interim trade deal. Of course, markets are already going on to the Yabu stage of saying, well, so what? But at least it sort of puts a line under things and it creates a little bit more stability. And I think there's a growing understanding that a full trade deal is actually going to be a process of several years now.
Yeah, it certainly might be a picture to be really patient for. All right, let's turn our attention locally. This was a week where we saw retailers really make the headlines as well. Everything from Massmart, right through to Woolworths, and then ShopRite even getting fined at some stage as well for reckless lending. Is there perhaps a problem in South Africa's retail segment? Is it just a case of a really tight economic environment?
I think it's a very, very tight economic environment. First of all, I think compared to previous years, I would say that the retailers across the board are pretty late in terms of putting out their trading statements. Normally by now you've seen a number of them. So far we've only seen two, and they've both been horrid. Sure. And that was Truworths and Mr. Price. And in effect, when you look through it on their like for like, which is where you have the same established shops, and they both look like they gave up turnover more or less of a real 2%, i.e. minus 2% in real terms. Sure. So that's pretty rough.
Yeah, certainly does hurt them. Is there perhaps room for growth, or will their upturn then be purely dependent really on what happens in South Africa's economy?
I think we need to see the consumer recover as well. I mean, certainly some of the indicators, for example, if we look at inflation, inflation can indicate what's happening with the consumer as well. I mean, demand can be involved in that. And if we consider where the SARB came from, I mean, 2 months ago when they last met, inflation CPI was 4.1, and so was PPI, by the way.
Yeah.
The figures going into this latest meeting was 3.6 and 2.3. Inflation has seriously come down, and that suggests that the economy is really sputtering quite badly.
So no surprise then, as the Reserve Bank yesterday cut interest rates for you.
Yeah, I guess the surprise was that up until now there'd been statements by the SARB that they were focusing on things like macro factors such as would there be downgrades, etc., etc. And I think with this latest statement, they seem to have come back more a little bit to fundamentals like inflation and growth, which I think is very welcome, because they can't really do anything about a downgrade anyway. It's indeterminate. It's an unknown timeline, so perhaps best left alone. And I think this is welcome. I mean, I know that the SARB cannot solve the country's economic problems, but certainly by being too tight, they can aggravate them.
Yeah. Does that mean then you can see another cut in interest rates at a later stage? Hopefully, if things aren't too bad in the country as well.
I think hopefully. Frankly, I think they may well be in danger of being a little bit behind the curve, but I guess there is scope for another cut if that inflation data stays as low as it is.
I suppose it's also at a point where one may forget, in a sense, that look, it doesn't matter really what they do when it comes to the curve, because they tend to not follow the curve too much as well, as the Governor, Lesotho Kganyago, would often tell you on that front. All right, very quickly then on the South African currency, also 14.39 odd against the US dollar. It weakened a touch, having started the year at around 14 Rand, but you know, it's at a stage, I suppose, where one could say it's pretty stable. Would you agree?
Currently, it's pretty stable. I think one of the things that has been helping is levels of precious metals have actually been very firm in the last month or so.
Yeah.
And it's not all just related to whether or not there was stability around the whole, whether you're talking Middle East or trade.
Sure.
I think there's also an issue. Negative interest rates, for example, in Europe and Japan have been encouraging gold buying, because of course you can buy your gold and it's a zero interest rate as opposed to paying your bank to hold it. So there's quite a few issues in the cocktail there.
All right, well, all right. Unfortunately, that is all we have time for, but really good seeing you, and we'll continue to chat to you, of course, as the year goes by. Thank you so much for your time. Warwick Lucas there from Galileo Capital joining us as we get to unpack that market picture. As we made note of course, the PGM space just continuing to flourish by the seams of things. More, of course, by way of retrenchment. Sibanye Stillwater also set to retrench 4,775 workers, it seems as well. So some retrenchments coming to the fore. It has been a difficult start to the year. We'll continue to check in on exactly where things fare for the remainder of it. But for now, we do go to a short break. An SME on point, my colleague